Hello and welcome to My Finance Teacher on YouTube. Gold is experiencing a little bit of a bounce up at the moment, but it's not time to back up the truck and load up with some gold yet. Let's have a look at what's happening. In front of you is a daily chart of gold price. This blue line is a 200-day moving average. Now, as I mentioned, over the last couple of days, there is a nice bounce up in gold. Nothing significant, but rather nice. However, I think it's going to be only a temporary move up, because I believe we are in the downward phase of this half-a-year cycle in gold, of this intermediate cycle in gold, and general trend should be downward. It has been time. It is time for a temporary move up for a few reasons. One of them is this 10-day RSI, which almost reached oversold levels. So there is a tendency for the price to bounce up when we reach oversold levels, unless we get embedded in those levels, of course. And that might happen over the next several weeks. Besides this, there are a couple of support levels that gold has recently reached, and I've mentioned one of those support levels in my previous video, the link to which you can see at the top right corner of your screen at the moment. Now, those support levels are this 200-day moving average, the blue line, and also the support level that we constructed in the previous video by connecting these two previous shorter cycle lows. So that gives us a support level around the price of 1230 or so, and gold bounced up from slightly above those support levels. I think this move up will continue for several days, and after that we will see a decline in gold price over the next several weeks. So let's have a look at the weekly chart. This is a weekly chart of gold going back more than a year already, and here I show these intermediate or these half-a-year cycles in gold, which I think last for about half a year, and we see that the previous few lasted anywhere between 4 months to 6.5 months, and we measure them from the low to the low. Now, how about this cycle? It has already been going on for about 6 months. That is why I think we are in the declining phase of an intermediate cycle, because we are in the time band for cycle to finish soon with another low, and that is why I don't think gold price is going to break these recent highs of 1300. That is why I think this bounce up is only a temporary move up. For this cycle to finish, one of the requirements for the cycle to finish is to create a lower low. Lower low compared to these shorter term cycles. These intermediate cycles in gold, 6 months, which last for about 6 months, generally consist of several shorter term cycles which last for about a month or month and a half or 2 months each. And these intermediate cycles, half-a-year cycles in gold, generally finish with a lower low. It happened in the previous cycle, it happened in the cycle before that, and before that. It basically happened with all of the cycles we can see on the screen. Actually, on the weekly chart we don't see very much. I've looked at that in one of my previous videos using a daily chart, which shows more details. Anyway, back to the expectations over the next several weeks. For that reason, I think gold price is going to break this price, which is around 1210 or so, before we reach the next low point of this intermediate cycle. Additionally, I think gold price should move slightly lower than that based on this triangle consolidation pattern. If before the intermediate cycle finishes, gold price completes this consolidation pattern, then it should move somewhere close to this lower boundary of this triangle. And that's actually close to the price of 1180 or so. So that means price over the next weeks, gold price will even break down below 1200 or so. Whether that's going to happen or not is not a certainty, of course, but that is one of my expectations over the next several weeks. And you can see from the previous half-a-year cycle that they can finish with quite a dramatic decline, so that can still happen over the next several weeks. Plus, that will give us a relatively long intermediate cycle, which might last for about 7 months, so we will generally be in the time band to create a next low. And that is when it's going to be time to load up on some gold for the shoot upwards, which is going to be a significant move up, I think, because of this long-term consolidation that we've been experiencing for nearly a year and a half now. So with this long consolidation, the move up once we break out of the consolidation zone is generally a strong one. Remember, this is not investment advice. However, I do wish you luck, and I appreciate your comments and likes under the video. Thank you.